Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the NASDAQ indices. So we start with a look at the daily chart of the S&P 500, and you can see that it's been a pretty choppy, messy affair lately, and that's been the case for the last couple of weeks. Notice that at the bottom end, 4120 has been support in the last few weeks, and then the area, the round figure at 4,200 has been a big technical level, but it's been quite sticky. Last week I thought we were breaking out above 4,200 and we'd head up towards 4280 and make some new highs. The market did briefly make a new high, but it didn't get up towards the sort of target area that I was looking for. And yesterday, being Monday this week, we saw quite a sharp reversal on the S&P. But notwithstanding that fact, it is still making higher lows and higher highs, which is something you'll see the NASDAQ not quite doing at the moment. Do notice on the S&P 500 here that there's negative divergence on the RSI at the top there. So what that indicates is that there's slowing upward momentum here. And often that type of negative divergence does precede a change in trend direction. So a little bit of caution on the long side there, I would think, given that negative divergence. And if the market were to come down and break down below that 4120 support area, then potentially it opens a move down to the 50-day moving average and possibly to the gap at 4025. If we then move on to the hourly chart, there you can see that trading action in more detail. The big level this week has been 42.20. The fact that the market broke down below that yesterday is a slightly bearish break for the near term. And it does open the possibility for a little bit more weakness. As I sit here and talk right now, the futures are down slightly. So it's possible that we just see that market trade back into that sideways range that we've seen over the last couple of weeks. And again, there you can see the significance of that 4120 support down at the lower levels. Then if we turn our attention to the NASDAQ 100, we start with a look at the daily chart over here. And there you can see also this market has been rolling over a little bit over the last couple of weeks, certainly exhibiting a lot more relative weakness than what the S&P 500 has been. You can see 13,320 odd is a significant support level there. Market's just above that at the moment, but with the futures trading weaker, we might see that area being tested. And if that area were to break to the downside, then 13,000 is a nice round figure, and that's where the uptrend comes in from October last year. So we'd look at that as a possible area where some buying might emerge. Then finally, let's take a look at the hourly chart of the NASDAQ. There you can see the significant levels. So last week we spoke about that range between 13,750 and 14,050. The market has broken down to the bottom end of that trading range, and you can see the rebound back up towards 13,750 was met with selling pressure during the week. It's now broken down below 13,400, and that is also a short-term support level that has obviously been broken and opens potential for a little bit more downside. There are a number of gaps on this NASDAQ chart that are indicated on the left-hand side there. First gap at 13,300, then at 13,150, and then the main gap down there, 12,900. And that lower gap is the one that would coincide with the 13,000 round figure that I alluded to on the previous chart. So if this market continues to languish and remains below the moving averages there on that hourly chart as it is now, then it leads to the possibility that we could see a little bit more weakness and possibly a move down towards 13,000 on the NASDAQ. That's all I've got for you this week. I'll be back again next week with another look at these indices.